Hello and welcome viewers to our podcast. My name is Narendra Agarwal and today we have Mr. Anirudh Garg with us, who's the fund manager for Invasset PMS. Hello Anirudh and welcome to the podcast.
Thank you, Narendra. Thank you for having me. It's a pleasure.
Okay, Anirudh, my first question is that Invasset PMS is the only fund in the country which went into 100% cash. Extremely bold move. So we want you to tell us the rationale behind it.
Yeah. So, Naren, the rationale behind this is very simple. First of all, PMS investors, if they did not want this option, that somewhere where the markets are exuberant, they're super expensive, they cannot move into cash, then they would have gone for mutual funds. There are plenty of good mutual funds out there. But the problem with equity mutual funds is that 65% of their assets under management have always needs to be invested in equity. So that's why people choose sophisticated products like, PMS. And I
Mhm.
believe that Invasset PMS, I've always said that, and this is an advocacy of it, that we are India's only true unbiased multi-cap PMS. What do I mean by that? First of all, we do not differentiate whether we have to buy large caps, mid caps, or small caps. Though we always ensure that liquidity is there, you would have never seen a liquidity problem with any of our stocks. Okay. So, liquidity is always there with us, but as the market, depending on what type of run it is, what opportunities out there in the market, we take
Mhm.
decisions accordingly. Secondly, we never biased ourselves against whether we are value investing or growth investing or quality investing or not investing at all. We follow a very, very simple framework, Naren. Let's divide it. I've said it to my investors again and again. Let's divide your the screen in front of you into four quadrants. The
Mhm.
first is value investing. So these are the four styles according to which 90% of investors or fund managers they invest. Value
Mhm.
investing, growth investing,
Mhm.
quality investing, and safety investing. Now we have developed something called the greed and fear matrix, which tells us what type of investing to do when the markets are extremely oversold, as they are turning out to be now, or post the Russia Ukraine war, or during COVID. Our indicator tells us that the markets are extremely oversold. There is extreme fear in the market, which
Mhm.
makes very attractive, very good companies, India's good blue chip companies. They come at discounts, start trading below their intrinsic value, start providing opportunities that they have not provided in the last couple of years. This time we go in for value investing. We believe that you should do value investing only when there is overall value in the market. Otherwise, you would be sometimes caught in a value trap. Okay, so
Mhm.
in inexpensive markets, we do value investing. As the new bull run starts, we have a very simple philosophy that each bull run is guided by new leaders, be it stocks, sectors, groups. For example, let's look at the latest ones. We all know about 2000 and tech run and everything, but let's look at the one that started from say post-COVID till
Mhm. Mhm.
2021. So it was
Yep.
primarily led by COVID problems. So you had pharmaceuticals, you had IT leading the pack, you had Adani's leading the pack.
Mhm.
Okay. Did they do the same? Did they lead the pack after that as well? No. The next pack, which started from 2022 June or post the Russia-Ukraine wars, that pack was led by what? Capex, railways, defense, infrastructure, power, and ultimately some quality companies also, as they always do, joined the race. And now finally, we are up for the third one. Yeah. So this is a continuous process, Naren. We do growth investing when there is, um, you know, a new bull run is starting. And
Mhm.
finally, when the market it becomes expensive. Now, when the market has become expensive, it can stay expensive for a very long period of time. We do the third, quality investing, keeping in mind that we can gain 15-18% from here. Even if
Mhm.
we lose, we have the best companies. These companies have very prudent managements. They are leaders in market share. They have moats working for them. They have the first mover advantage working for them. Then they are generally the leaders in what they're doing. So all these companies, they'll give us 15-20% or take 15-20% in worst case scenario from us. This is inexpensive markets. But finally, Naren, comes a time where you see exuberance in the market. You
Mhm.
know, back in September of 2021, we saw that. Back in 2018, we saw that. But now, in September, October, we saw that. This is a time where everybody becomes an investor.
Mm.
And
Yeah.
fund managers, I've seen it at fund managers also because I've been an investor most of my life. I've seen it in fund managers. They just go crazy after AUM. I've
Mm.
seen the most intelligent fund managers buying stocks for their investors this time at valuations which were exuberant.
Mm.
No rationale, no fundamental could, you know, uh, justify those valuations. And it was in momentum. Everybody was making money, and people were just buying momentum. So somewhere, momentum buying is not bad, but somewhere you have to stop it. Yeah. So we do not do that for clients. And Naren, it's very, very difficult. Very difficult. As a fund manager, it's a lose-lose game for you in the
Mhm.
short run, but in the long run, it's a win-win game. I'll explain it to you why. Suppose you're right, and the suppose you're wrong, first of all, and the
Mhm.
market starts rising when you sell, when you move to 100% cash, the investors would be after you.
Mhm.
Why did you
Mhm.
sell and not believe in long-term investing and all? You cannot explain. It's very difficult to explain to them that we have booked profits in an expensive market. That is
Absolutely.
what we've done. And secondly, if the markets they fall, investors' money is preserved, but we as prudent fund managers do not charge anything for that money saved from our clients. I think it's our moral duty towards them. Being an investor, again, I can feel that pain. Okay.
Yeah.
So we have designed our fee structures accordingly. We do not charge anything to our clients when we have saved money for them. It's actually a present from our side for trusting us, from being with us in those good and bad times. So I think it is very, very important as investors, as fund managers, to look at the rationality and
Mhm.
not go into that herd behavior and jump off the cliff. That is why we had taken this decision to move to cash, Naren.
Okay, so I've understood what you're saying, but let's take it back now. So you moved to cash mid-December somewhere, and at that time Nifty was 25,000 or so levels. Uh, Today Nifty is down 10% or so approximately. So we want to understand, is it's the same rationale going on now, or has it changed?
See, Naren, we'll have to look at the broader picture for this. If we talk, we've sold somewhere between 10th to 15th of December. The
Mhm.
Nifty was around, as you rightly said, somewhere around 24,800, 25,000 levels or something. But the small cap index was hitting the all-time high.
Yes.
From there, the Nifty is down 10%. The small cap index is down 17%. But majority of the portfolios, majority of those so talked about portfolios are down 20% plus today.
Mm-hmm.
Okay. I saw a few portfolios which are down around 25%.
Mm-hmm.
Yeah. So you do not have to look at Nifty all the time, and because you have not bought the Nifty, you have bought the flavors of the day. And that was my main concern when I sold that. I do not look at, if you look at the interview properly, Naren, which I gave post selling, I
Mm-hmm.
really talked that I am not that uncomfortable with the large caps. I'm more concerned with mid and small caps and those exuberant shares that are out there in the market. Like, you get those BAP stocks, buy at any price stocks every year, every bull run. You
Yeah.
had the D-Marts and HDFCs and Bajaj Twins back in 2021. Now you had all those trends and
Yeah.
what do you call it, Dixon Technologies and this and that. I won't go into taking names of stocks, but yes, all those similar companies which were going up day by day or before when we sold Musgard and all. So there are generally exuberances in the market. You have to recognize those exuberances from time to time, take decisions accordingly, because when the fall comes, your
Mhm.
portfolio is down 25, 20, 25, 30%. You have to preserve those 25, 30% because to get it back, now you have to make another 50%.
Absolutely,
Your
yes.
next 1 year has gone down the drain, or
Mhm.
your last 1 year has gone down the drain. That is what you have to look at. So my concern is very, very simple. I was not ready to lose it for my investors. Now this preservation will help us to double our money in the next 2, 3 years. That is what our aim is. But giving a disclaimer here that it is not a guarantee. But we have seen it in the past that the next couple of years for us should be very, very good. Now things have changed. The fear has set in the market. Our greed and fear matrix is telling us that okay, it's right time to nibble, start nibbling at least, and very soon we'll eat the whole pie, jump in and get the value that we wanted for our investors.
Absolutely great move. I believe that the cash call has been very bold, but it is paying off. So, what is your advice to your investors from here on? How should they look at Investset and its philosophy and ideology to invest?
I think rather than looking at investor, you should looking at investing as such. Why as an equity investor, you make more money than a debt investor? First of all, you're taking risk. Okay. You're investing in a company. The future is uncertain. You're betting on uncertainty. And the second most important point is you are entering when things are not right. Okay.
Mm.
When there is some sort of confusion, when there is some sort of dilemma that, okay, things are not right, this may go bad, that may go bad. Look at 2020. Where did the market make it slow? 23rd of March 2020, the day the lockdown was announced. We saw the biggest bull run in Indian markets from there. Post the Russia-Ukraine war, the market just lifted off. Okay. So you get these capitulations in the market from time to time. Initially, when they come, there is no news about it. But when the news comes, everybody thinks that the news is known only to me. Okay. And then people get into that fear shell and do not invest. Now, this is the time that we at Investment believe is the right time to invest. Okay. And see, my portfolio is almost equal to the funds that I manage for people.
Mhm.
I did not invest it back because I was not ready to invest my portfolio also. Now, when there is chaos in the market, there is fear in the market, when everything seems gloomy and doomy, this is the right opportunity for me. This is something that I wish for. This is something that I look for, something that our algorithm craves for. And I'm very sure that in the next 2 years, equity markets from here would reward us very handsomely.
That is brilliant. The investment mantra is that every bad news has an upward trend. And that is what Investset
Naren,
PMS is
I
looking
have a
at.
very funny way of putting it. In a very, I like to put things in way people can remember.
Mhm.
Back in 2021, one of my investors and a close friend also wanted to buy a E-class. I told him, do not buy right now. At the top, we'll buy an S-class. Okay. And I think the similar time has come. This is a time not to go out and spend your money. This is a time to save it and invest and dwell on the return on cap, the CAGR that you want.
So,
These
so that
decisions,
means I should
not
defer my.
selling, not selling here, buying at these levels, buying at levels where fear is there, and selling at levels where exuberance and greed is there, is one of very important mantra for investors to make money.
Oh, that's brilliant. So that means I'm deferring my buy call for E-class and looking for the S-class soon. Thank you so
It's just
much,
a
Anirudh,
metaphor.
for your time. It was wonderful, and I'm sure that our viewers are going to benefit immensely from this podcast. Thank you so much for your time.
Thank you, Naren.